All right, guys, another week's upon us. Even though the market is closed right now, we still have to go over five stocks, five companies that I'm watching for this week. And by the way, happy Labor Day, guys. Hope you're all having a great day. Hope you guys are having a great, long weekend, right? So, we're going to break down these five companies, and there's more than just five, but we're going to focus on five for this video, all of which are reporting earnings. We're going to talk about Salesforce, Broadcom, Lululemon, to name a few, and we'll break down the indexes, see what's going on the S&P, the NASDAQ, the whole nine yards. So guys, hit the like button, feel free to subscribe, join the email stock newsletter, that's free, and check out my Patreon if you guys want to keep up with my portfolio updates. I post those every single week. All the links are down below, and of course, guys, come on, take a sip of your coffee. Cheers. I appreciate you all for tuning in. And let's dive into it. So overall, we ended off Friday on a pretty rocky note for the overall stock market. You guys can see if I pull up SPY, we dumped pretty aggressively. We opened up at 647.80 and we ended up closing down. We got all the way down to 643. And we closed at about 645. So we dumped pretty aggressively. Obviously it wasn't a crash or anything like that, but we went down about 0.75% at the worst. QQQ went down about, let's see here, opened up at 575-ish, a little under that, and it got all the way down to 568. All right, we dumped a little bit over 1%. So we're coming off of a red day for stocks. It looks like, QQQ closed down 1.2% on Friday, and SPY went down about 0.6. I guess exactly it closed 0.6% in the red. So we're coming off of a red day where the VIX was up. I think we got to 16 points, 5% up on Friday on the VIX. So this is the environment we're in. We're coming off of a week where overall stocks were a bit shaky. And again, we're coming off of that rough Friday. So at this point in time, guys, stocks are, especially QQQ, we have a bit of a head and shoulders. It's teeter-tottering. It could go either way at this point. And SPY looks a little bit better from a bullish perspective on the charts. But still, it's pulling back a bit. Will it come down even more? It looks like the futures are green right now. Looks like S&P futures are up 0.2%. Looks like, actually, no, gold's up 0.75. Looks like oil's up. So we're seeing some movement. We'll see overall how this plays out. But yeah, let's dive into these stocks. Right? We have five to go over. CRM is number one, which you guys know this stock has been struggling, man. The company is still a very strong company, no doubt about it, in my opinion, but the stock has been struggling. We can see we hit highs at $370 a share back in early 2025 in January, and now we're at $256 a share. Stock's down about 30% from that high, which I don't even think that's the all-time high. No, it's not. Looks like all-time highs were hit. Actually, no, wait, that might be the all-time high. Either way, we hit all-time highs just before the end of 2025 or 2024, excuse me. Either way, we're down over 30%, or right around 30% from all-time highs. And if you pull the layers back on the max chart here, guys, this is a healthy pullback for CRM. When we hit 370, 365, let's keep it real. The stock was pretty overbought just on the charts at that point in time. And I'm pretty sure they had a pretty rough quarter. They dropped the ball on a quarter there and the stock dumped. That's all it takes, especially when a stock has run up so much. It's priced to perfection. Boom. All it takes is a bad quarter. It brings the stock down. You guys know that. And it's kind of been down now for what? It's already September. Happy September, guys. 9 months, 9 months we're down. So it's like, CRM's been in the toilet, but we'll see. They can slowly start turning things around, and I'll draw this trend line out. You can see we're still on a downtrend, but the second we start, seeing some momentum in my eyes above 260, 270, 275, that's where we could start breaking out, right? So CRM, they're looking at EPS, well, analysts have them doing on average $2.78 versus $2.56 from last year. So not bad. And revenue, $10.14 billion is the average estimate versus $9.32 billion from last year. That would be up 8.7% year over year. Not bad. So if they come in, let's say at 10% growth, if they come in with strong guidance, signs that things are getting better, right? Fundamentally, yeah, I mean, this thing could easily start breaking out and it could have a lot more room to go considering how beaten up it is. So I'm going to set up my alert here, guys, just above this downtrend, this trend line that we have. I'll put it at $265 a share maybe for now. We'll see if we start breaking out of those highs from August, start gaining some momentum. So that's CRM. AVGO is another one, which obviously you guys know is Broadcom. Let's pull this up and take a look. AVGO is trading near highs. We're at $297 a share. I'm pretty sure 318 is the all-time high. We hit that about 2 weeks ago. Let me double check. Yeah, I mean, it is the all-time high. And look at that max chart. Holy smokes, right? 3-year chart as well. My goodness. Broadcom was $41 a share back just about 3 years ago. Under 3 years ago, it was $41 a share. Now it's $300. So we are looking a little toppy here on Broadcom. We have a head and shoulders. Looking at the chart, clear cut, head and shoulders, left shoulder, head, right shoulder. You guys see it right here. And now we're starting to trade down to these moving averages. We're putting in another lower high here. You're noticing it. So overall, guys, it kind of looks like bears are in charge on Broadcom in the very, very short term. Obviously, if you pull the layers back, we all know the bulls are in charge. But if we're looking into earnings now in the very short term, we do see some signs here. We have, again, we're dumping down as of Friday, 3.6% red day. We have that head and shoulders. We're under the 180 SMA. We're holding above the 50 SMA on this 4-hour chart by a thread. So AVGO could dump, especially if earnings are, less than good. You know what I mean? If their earnings are bad, or even if they're not as good as expected, we could get a drop here. So analysts have them doing $1.66 EPS versus $1.24 expected. Revenue $15.82 billion versus $13.07 billion from last year, up 21% year over year. So their revenue growth, the estimate is 21%. For year over year growth, very good. And EPS, not bad, actually very good. $1.66 expected on average versus, like I said, $1.24 from last year. But it's all going to come down, as always, to guidance. And at this point, guys, forget the head and shoulders for a second. If I clear the drawing set and just come here, we can see we also have a wedge, right? We're making these higher lows. Even though we're dumping a little bit here, we're still making higher lows, clearly, and we have lower highs being made at the same time. So it kind of looks like, guys, we're going to have to be patient and see what direction we pick here. And earnings are, I think, we have them on Wednesday. So we do have a little more, or today's Monday. So I think these are on Thursday. Yeah, they're on Thursday. So we have a little bit of time here. Let's see how AVGO plays out Tuesday morning. We'll do an update on it tomorrow. We'll see how it goes and what direction it's starting to move in. But that's AVGO. Lululemon is another one, which you guys know, oof, man, this stock, I was just looking at it. It's down 47% year to date. You can't really, actually, wait, now I do have a year to date time frame, guys. Look at that. This is the year to date time frame on Lululemon. My goodness, man. This is, it started off the year in the 370s-ish, right? Then we saw a bit of upside. It was like, people were hopeful. Lululemon is going, 400s, 410, 420, here we go. And then all of a sudden, boom, started dumping. And then obviously in April, it crashed even more. Actually, no, that's wrong. It crashed so much heading into April that investors were like, even now with tariffs, the whole independent, whatever the heck, Liberation Day, blah blah blah, in early April, even with all this going on, we can't get the stock lower. It's already cut in half pretty much. I mean, look, into April, it went from 420 down to 230, guys. That is insane. Then it rallied a bit into June, right? So it had a kind of a relief rally there, a bit of a euphoric rally. It went up 45%, and then earnings hit, and then boom, investors came back to their senses. Reality set in, like, oh, the stock's up 43%, but on what? The fundamentals are still bad. Earnings were not the best. This was back in June, and the stock, look at this gap down after that earnings report, guys. My goodness, from 340, it went all the way to 265 in a day, essentially, right? And then it just downtrended all of June. And yeah, you get the point, right? It's not been good for Lululemon. Analysts have them doing EPS of $2.87 on average versus $3.15 from last year. Ugh. And revenue, the estimate, this is not bad actually, $2.54 billion versus $2.37 billion from last year, up 7.1% year over year. So they're going to grow 7% on average here. We'll see how it goes. But that's what the average estimate is year over year. Not bad. But man, the stock's down 47% year to date. If you go to the S&P 500 right now and you filter, worst performing stocks, you're going to see Lululemon. It was there last year as well. This stock just can't catch a break. I mean, look, it was super hot. It got to 515. To think it was at $515 in January of 24 is insane. Then it tanked all of 2024. And I remember last year I was looking at it literally a year ago. It was at what, 230? And I was like, oh, it's one of the worst performing S&P stocks. Let me look deeper into it. The stock rallied all the way to 420. I never bought it. And clearly a year later, it's lower than where it was when I started looking into it. I'm glad I didn't buy it. There's a reason why I didn't buy it. And now there's even more risk than there was a year ago. So it's like I'm even more turned off from Lulu. But if it gets down to a point where it's like in the low hundreds, or if it gets down to the mid hundreds, I'm going to be like, okay, maybe there's something here. But we're not there yet. And I love Lulu. I have a bunch of their products, guys. I have like 10 Lululemon shirts. I love their shirts. But just because I've said this before, just because you like a product doesn't mean you buy the stock. It doesn't work like that. If I did that a year ago, it would not be looking good. But yeah, next stock here is NIO. And by the way, guys, hit the like button. Make sure to subscribe. Share the video. I appreciate all you guys for tuning in. As always, NIO stock has been on a heater. This stock was at $3.40 in early July. We're talking like less than 2 months ago. Now we're at $6.40. The stock's up 87%. And you guys know it's a Chinese company, electric vehicle company. It's one that I used to own years ago. I doubt anybody remembers out there, but well, for those that didn't know, I've been doing this YouTube channel for like 7-8 years now. It's been a long time. And when I first bought NIO, we were talking about it on the channel. It was years ago. I don't own it anymore, but I bought it in the single digits before it blew up to $66. I know that sounds crazy, but it happened. All the OG people probably remember that. I don't know if anybody's out there watching, but it's funny. Whenever I hear NIO stock, that's what I think of. Like, oh, I bought it at like $2, $3, $4, $5, $6 before the big run up. Then I took my profits, of course, as anybody sane would. And here we are. We're down like 90% from all-time highs. But hey, there could be something here. There could be something here. But I don't know. We'll see. The stock is breaking out, though, which is why I'm saying there could be something here on these charts. And fundamentally, they're not doing that bad. I mean, they're not growing like crazy. They're still losing money. EPS estimate, analysts have them losing $2.20 versus $2.21 from last year. So that loss is barely narrowing year over year. And revenue, the estimate's $19.72 billion, or $74 billion rather, versus $17.45 billion from last year. That's up 13% year over year. Not bad for NIO, but I want to get that. I want to see that growth get back to where it was back when I owned the stock a couple years ago. Geez, I forget. Honestly, man, it's been years now. I keep forgetting it. It's 2026 almost, which is insane. It's 2025. I mean, geez, man, it must have been like 4 or 5 years ago now. Either way, whatever. But yeah, that's NIO. Keep your eyes on them. They're this upcoming. I think they're tomorrow. Oh wow, they're tomorrow, guys. So get ready for that. And last but not least, Zscaler, ticker symbol ZS. They're a cybersecurity company. You guys know that, competitor to what's it called? CrowdStrike, right? And they're on, I think they're tomorrow. Yeah, they're tomorrow. EPS for Zscaler is 80 cents. That's what analysts have them doing versus 88 cents from last year. So not the best there for EPS, but revenue. Pay attention to revenue. It's growing. 707 million is the estimate for Zscaler here versus $592 million from last year. So that's going to be up 19% year over year. Not bad. Not bad for Zscaler. And the stock is down about $50 a share heading into these earnings. So that could put it in an interesting position, especially if they beat. The stock's down 13%. If they crush earnings, that's going to put them in an interesting spot. It could break out. It's already starting to gain momentum. Even though we had a 1.2% red day on Friday, look at this big move Wednesday, Thursday. We had a big pop Wednesday. Well, a decent pop Wednesday, followed by a huge pop Thursday to about 285 or 284-ish. And again, we saw that little red day Friday. We might pop further here if earnings are strong, guys. They're after the bell. Let's see how we look into the aftermarket on Zscaler. We'll see, if momentum starts to build up. This could be one worth, monitoring. You know what I mean? So what do you guys think? Let me know your thoughts in the comments. That's pretty much it. Bit of a longer video for just 5 stocks today, guys. I guess we rambled a little bit. What do you guys think? Let me know in the comments. Hit the like button, subscribe, join the email stock newsletter, blah, blah, blah. You guys know all the links are down below. The Patreon if you want to keep up with my portfolio updates, see what I'm doing, the moves I'm making, trades, all that. Linked down below. And with that being said, cheers. I'll catch you all in the next video.